The Monetary Policy Committee of the Reserve Bank of India is widely expected to maintain a status quo on repo rates. But commentary on recent regulatory action may also be forthcoming. Crude continues to remain subdued as demand worries persist. The world's largest oil importer, China, is likely to see a slowdown in demand growth next year, as per Bloomberg. Jobless claims in the US went up for the week ending December 2nd, but the overall number falls after hitting a two-year high last week. The cooling labor market pushes stocks to eke out gains as they snap a three-day losing streak. The 10-year Treasury rises to 4.17% overnight. Sugar stocks will be under pressure today as the government curbs the use of sugarcane juice for ethanol production. This may delay the 20% fuel blending target, which was set for 2025. And finally, IIFL Securities gets relief. The Securities Appellate Tribunal overturns the SEBI's order restraining the financial services company from acquiring new clients. It also lowers the penalty from 1 crore rupees to 20 lakh rupees. All right, now let's start with setting you up for the biggest event of the week, and that's the outcome of the RBI Monetary Policy Committee's two-day meeting. Now, most economists are expecting a status quo on the rates, and Pallavi Nahata is joining me to tell you why. Pallavi, morning. What do you have for us?
Hi, Alex. Good morning. So like you said, India's Monetary Policy Committee is set to announce its decision in a very short while from now. The MPC is likely to continue to maintain a status quo. In fact, the last time I checked, of the 44 economists polled by Bloomberg, 43 expect a status quo. Now, crude prices are a little bit lower from when the MPC last met. Growth looks solid and core inflation has been easing. So all in all, it would be fair to say that the RBI does see greater optionality this time around. Still, it's expected to remain cautious. Let's have a very quick look at what's changed from the last policy to this one. GDP growth came in stronger than expected for Q2 FY24. It came in at 7.6%. Inflation came in at 4.87 in October. That's the second straight month that we saw inflation coming within the central bank's target range of 4 plus or minus 2%. And crude, as I mentioned, has significantly eased, right? So what we do expect going forward is that the RBI is likely to continue to remain cautious. One reason for that is that food and beverage inflation still remains fairly strong. It's coming at 6.2% in October. That's almost the same as what we saw in the previous month. So apart from expectations of a status quo, we're also expecting liquidity conditions to remain tight going forward.
Absolutely. Thanks so much, Pallavi, for bringing us those details. And of course, between last policy and this one, you also had regulatory changes in the banking space. So you could see some commentary on that during the statement today, which, by the way, is at 10 a.m. So you can track that live right here. Let's talk about a few more headlines from the global scenario before we head to the Indian markets. And we're tracking the latest data from the US. Applications for jobless benefits rose for the week ending the 2nd of December. However, the overall number of people collecting unemployment benefits fell after hitting its highest level in 2 years last week. Claims for unemployment benefits rose to 220,000 for the week ending the 2nd of December, and that was in line with expectations. The cooling labor market has pushed US stocks to eke out gains after they snapped a three-day losing streak, and the Nasdaq Composite climbed over 1%, while the S&P 500 and the Dow gained about 0.8 and 0.2% respectively. Brent crude has remained a little subdued, trading below the $75 per barrel mark. I'm talking about Brent here and not NYMEX. And the latest update is that China will likely see oil demand growth slowing next year, which casts further doubt on the global demand scenario for 2024. China is expected to consume an additional 500,000 barrels per day, and that's according to the median of estimates of 11 industry consultants and analysts that were surveyed by Bloomberg. That's less than a third of the increase that was seen in 2023, which is why there is a bit of a concern. But let's set you up for the day's trade with the latest action from the F&O space and what you need to know heading into trade today. To tell you more about the key levels to watch, I'm joined by Agam Vakil. Agam, morning. And one eye on 21,000?
Yeah, 100%, Alex. So it was a quiet day of trade yesterday. We didn't see too much traction despite the fact that it was, in fact, the Nifty weekly options expiry coming through. And in terms of option premiums too, perhaps on expected lines, we saw considerable contraction there. But I'm going to start off with how things have panned out in the index futures. So for now, even as the underlying declined by around 0.2%, we did see a little bit of an increase in open interest as far as your index futures go, to the tune of nearly 7%. Coming down to the Bank Nifty, the trend of unwinding has now ended, and we are now starting to see a little bit more increase in open interest, and this time perhaps towards a little bit of longs building in, even though the underlying has closed absolutely flat. Let's talk about how open interest has been, and it's coming through across the several strikes on the Nifty. So for now, we continue to see the 21,000 call as the one with the maximum open interest, and that perhaps could still provide market participants with a little bit of resistance on the higher end, even though we have seen several attempts for the Nifty to move above that mark. So far, that hasn't been the case. And of course, in terms of puts, continuing to keep an eye on the 20,900 and the 20,800 levels, because that's where we've seen a little bit more traction come through as far as your writing is concerned. Let's move on and talk about all your open interest gainers and losers. So in terms of open interest gainers, we are keeping an eye on the likes of Balrampur Chini, HUL and Apollo Tyres, where we did see short building up. Remember, the sugar sector will be in focus on account of the news with respect to pricing. And of course, Concor and MGL, on the other hand, saw longs building up. On the other hand, in terms of stocks which saw unwinding, we saw short covering across in the top losers as far as open interest is concerned. So BEL, Tata Communications, Bata, as well as Z Entertainment, along with Canfin Homes, all of them looking at advances and declines in open interest. So we continue to keep an eye on this one. But Alex, at the end of the day, it is still going to be about the Nifty and whether or not it can, in fact, scale about 21,000 for now.
All right, so that's a key number to watch. But Agam, we're also talking about life insurance companies. And in fact, LIC yesterday, gaining over 5%. It's had quite a stellar week over the last 4 or 5 trading sessions. But the other private insurers have also had quite a bit of gains over the last month or so. The latest update, of course, has to do with the insurance data for the month of November. It's not looking too encouraging, though, for the private players. What do you have for us?
Right. So, well, the month of November in general, Alex, has been a challenging one. And for a couple of reasons. One is the fact that they're coming off on a high base. And secondly, the offers this month have been higher. And because of that, we've actually seen a little bit of a decline as far as your private APEs are concerned for your private players. In fact, to the tune of around 1.3%. So if we can, in fact, actually bring the list of all those companies. So you have HDFC Life, which seen a decline around 3.7%. Let's talk about the others and move on. Well, we have something like an ICICI Pru and SBI Life, which have also seen a decline around 2.5%. Max Life is the only one which has in fact seen a growth on a year-on-year basis. And say for that, we have something like an LIC. Again, a very, very sharp decline to the tune of nearly 9% there. Coming down to the other aspect when it comes to your market share. For now, SBI Life the market share has been stable. We have seen a rise in the market share for Max Life, but remember, this is also on account to a certain extent because of the sharp growth that we've seen for the month. Again, stability coming in for HDFC Life and ICICI Pru as well. In terms of your new business premiums growth, we are seeing a sharp decline in HDFC Life. On the other hand, Max Life once again continues to outperform. Again, some key metrics, but we have to remember that Max Life, again, is coming off a low base. And as far as your market share is concerned, at the moment, the way things stand, at least in your larger insurance, save minus, of course, your LIC, SBI Life has still the largest share for now, followed by something like an HDFC Life at around 10%. And then sub 10% would include ICICI Pru, Max Life, and Bajaj Allianz. But on the whole, a weak month. And, well, it's going to be the month of December is going to be crucial in terms of the kind of trends that we can expect in the second half of this financial year, Alex.
All right. Thanks so much, Yogam, for laying that out for us. Now, it's time for a very quick break. But before we head into that break, we had the finance minister speak about what to expect in the upcoming budget. And remember, this is an interim budget. Here's what she had to say.
It is a matter of truth that the 1st February 24 budget that will be announced will just be a vote on account, because we are in an election mode. An election happens during the summer, the coming summer. So the budget that the government presents will just be able to, or would just be a budget to meet with the expenditure of the government till a new government comes to play. So, and that budget, following the British tradition, is called vote on account. So no spectacular announcements are made at that time. So you may have to wait till after the new government comes in July will be the next full budget, July 2024.
Welcome back. You're watching All You Need to Know. Let's turn attention to a few stocks that are likely to buzz in trade today. And we like to call it stocks to watch. We're joined first by Varsha, who will tell us a little bit more about Zomato as well as Star Finance, 5-Star Finance rather, that will be in focus. Varsha, morning. Why are these likely to be in focus?
So good morning, Alex. So stake sale in couple of companies. So let's start with Zomato. So we have Japan's SoftBank SVF Growth is likely to sell 1.1% stake in the company through a block deal. Now offer side stands at rupees 1,127 crore. Floor price has been set at rupees 120. Now this offers a marginal discount to the last closing price. Also, Citi has been appointed as the banker for the transaction. Now SVF Growth held 2.17% in Zomato in September quarter, of which it sold almost 1.1% stake in October. If you see the stock performance for the company, the year-to-date performance of the company has been 102%, while 1 year stock performance for the company has been almost 90%. Now, if you see the analyst recommendation of the 29 analysts tracking the stock, 25 maintained buy call, 0 suggested a hold call, and 4 suggested sell call with upside potential of almost 10%. Then we have 5-Star Business Finance, where Peak 15 Partners, TPG, and Matrix Partners plans to sell part of their stake with combined base size of 150 million US dollars. Now, this comes with an option of upsizing of rupees 75 million US dollars. ICICI Securities amongst the brokers managing the deal. Now, if you see the stock performance, the year-to-date stock performance of the company has been 25%.
All right, thanks so much for bringing us those details, Varsha. But we've got more stocks to watch out for, and those will be IRB Infra as well as Olectra Green Tech and IIFL Securities, which we made a mention of earlier. Himansh is joining to tell you more about each of those. Himansh, take it away.
Yes, Alex. So IRB Infrastructures, the first counter that's going to be in focus, is due to its 20% rise in toll collections for the month of November. It clocked in 437 crores of revenue, majority of which is coming in from the Mumbai-Pune Expressway. However, if you look at it sequentially, though, you are seeing a bit of moderation in toll collections compared to the previous month of October, where it clocked in 447 crores of revenue. What we have been seeing is that Diwali has led to some softening in economic activity, at least with regards to toll collection, as people chose to celebrate in their homes and not travel as much outside. Maximum toll collection, as I mentioned, is coming in from Mumbai-Pune. However, in terms of guidance, you are expecting, the second half is expected to see a 20% growth in toll collection over the second half of this year. The Gujarat Build, Operate and Transfer project is expected to commence soon, and 15% growth is expected in the EPC segment, which is the engineering, procurement and construction segment. From a stock perspective, the IRB developer stock has run up 22% year to date, and it could see some potential upside today as well. Next is Olectra Green, where the company has received an order for 40 e-bus supply and maintenance from Vasai Virar Municipal Corporation. The order is valued at close to 63 odd crores, and the order is to be delivered over a period of 7 months. Now, the net order book position at the moment stands at 8,209 buses, which are going to, and 214 of them were delivered in the first half of this year. In terms of capacity addition, they are working towards their adding more EV capacity, and the annual capacity outlay of 5,000 vehicles is expected to be operational by the fourth quarter of this year. Lastly, you have IIFL Securities, where the Securities Appellate Tribunal has set aside SEBI's order restraining them from onboarding more clients. The company, as of the last quarter, had 860 clients, both domestic and foreign. In June, the company was allegedly barred from onboarding new clients because of the misuse of funds. However, they have been vindicated from those allegations now, and the penalty imposed has been reduced from 1 crore to 20 lakhs, and the punishment is also now being called a technical glitch at most.
All right. Thanks so much, Himansh, for bringing us those details. IIFL Securities, of course, want to watch out for in trade today. But the other group of stocks that will likely be in focus is going to be the sugar stocks, because they ended the day in the red on Thursday, and this was on the back of news that the government had banned the use of sugarcane juice to produce ethanol. My colleague Hiral Dadia spoke with the managements of a couple of sugar companies to find out more about the supply constraints that have caused that move.
First reaction is one of relief, because what we were hearing since yesterday was that all ethanol made out of cane juice as well as B-heavy molasses would not be permitted going forward. But now what we are seeing in the notification is that only cane juice ethanol has been banned effective today. So whatever has been produced till now from cane juice against government's oil marketing company's orders, so that would continue to be supplied. But henceforward, only B-heavy ethanol will have to be made.
We were expecting that they would do this if there's a shortage of sugar. So I think that's what they've done.
Okay. And what would this actually mean for the industry?
See, those people who invested heavily for this kind of option would suffer, and we don't know how long this is going to last. So this is going to be something which is probably, going to be likely. But we should have probably created a buffer last year, of sugar if we anticipated a problem. But they were thinking that there'll never be a shortage of sugar.
All right, let's talk about Paytm. It was a big underperformer, to say the least, in trade yesterday, and the stock dropped about 18%. And that was on the back of the operational update that it sent out. But the company is going in for India's largest ever anchor round, and it is oversubscribed by about 10 times. We've got this update from Sajith Mangat. Sajith is joining in to tell you more about what this means. Sajith, what can you tell us about the contours of this?
You know, the thing is that Paytm is under pressure for the last couple of yesterday it was down nearly 18% because of the kind of guidance that came in, and we've been seeing a lot of commentary coming from the brokerages, and that's basically putting more pressure on the price of Paytm going forward. You have the JP Morgans of the world, which has downgraded the stock to neutral. We have Jeffries, which is now putting a price target of 1,050 as against 1,300. And is primarily on the back of the fact that you have the company has guided for a 40 to 50% decline in postpaid loans. There's going to be a sharp moderation coming in from a low ticket loan distribution business, which used to be a very high margin business for Paytm, and which was one of the reasons the growth in that segment was one of the reasons why the Paytm stock was coming back into the investor radar. Now that with this guidance which is coming in from the company, it's going to have a good knock on the earnings going forward, because roughly this loan business is accounting for 50 odd crores per quarter, and so we are looking hit of nearly 200 odd crores, and the biggest hit is going to come from Q4 onwards, because in Q3 the first 2 months have been relatively good for Paytm as per the as per the guidance which it came out with. But December is when it's going to take a sharp hit for this entire segment. So yeah, so after 18% knock and the stock at hovering around 661 odd, you're going to see further pressure, because there are still some of the anchor investors which came in at the time of the IPO still invested in this company, and there's many of the private equity companies which are also trying to exit in that. So there will be some pressure coming in in the near future for Paytm going forward, Alex.
All right. Thanks so much, Sajid, for bringing us those details. We were talking about Life Insurance Corporation earlier on the show, and in fact, it gained over 5% in trade yesterday, reclaimed the market capitalization of 5 lakh crore for the first time after July of 2022, and it has, of course, been in an uptrend after hitting a lifetime low of 530 on the 31st of March of 2023. Now, a couple more updates before we end, and this is from the global space. You have the Nikkei 225, which I've pointed out, which is one of the underperformers in trade today from the Asia Pac. And in fact, you have mixed trade in Asia, but that's on account of the fact that there could be a major move in Japanese monetary policy. You had Ryozo Himino, who is the Bank of Japan deputy governor, who hinted that any exit from the country's ultra-loose monetary policy could actually benefit households, fueling speculation that such an exit could be underway, because the Bank of Japan has been one of the holdouts for policy action on monetary policy, and it has maintained its rates at very low levels in order to spur the economy. And of course, as a result of that, you've had the yen that has been under pressure significantly over the course of this year. Japanese stocks as well trading with cuts this morning. But all action at home is going to be on the Monetary Policy Committee's outcome or rather meeting that took place over the last couple of days. The outcome is at 10 o'clock this morning, when the RBI governor announces that outcome. And we're largely expected to have a status quo on the policy rates, but there could be a few changes with regard to announcements on liquidity and other macro-prudential norms. So you would want to watch that space very closely. And of course, there could be statements made about the regulatory action that was taken on unsecured lending. Remember, the risk weights associated with unsecured lending were increased between policies. So the RBI governor is almost certain to have a comment about that. But that brings us to the end of this particular edition of All You Need to Know. Thanks so much for tuning in. Up next is India Market Open. So do stay tuned for that. you.